Hello and welcome to Chartbusters. Well, another day that at 10:30 a.m. we have the markets trading in the green, moving towards that 11,200 odd mark. And today, the standard performer of the last few days, that's the Nifty Bank, is not participating. I'm Nigel D'Souza joining in from home, and Mangalam Malu is joining me from the Mumbai News Center. Morning, Mangalam.
Good morning, Nigel. You said today the standout performer of the last couple of days, the Nifty Bank, is underperforming. And you also said it's another day where the market is higher. So interesting to know that, over the last couple of weeks, we've seen one sector take up the mantle. Earlier it was the IT sector, then the Nifty Bank started outperforming, and today, just as we speak, we have the auto index which has moved to the high point of the day, and along with the auto index we have the metal stocks doing fairly well as well. There you have the auto index at the high point, along with that the metals index doing fairly well as well. So this sector churn continues. The Nifty Bank underperformer. The important part, the mid-cap index is outperforming, and that's telling you that majority of the street believes that the downside for the frontline indices is protected. First up, all the top stories, and then we get cracking on all the individual stories that we're tracking this morning. L&T, that's the one that comes off the opening highs after reporting an operationally weak first quarter performance. The management says they are looking at cutting costs permanently.
Glenmark trades high after announcing positive results from their phase 3 clinical trial of favipiravir in the mild to moderate COVID patients.
Yes Bank shares under pressure owing to a possible arbitrage opportunity ahead of the allotment of FPO shares tomorrow.
In other results, Rallis India as well as ICICI Securities rally in trade on the back of a good showing in the first quarter.
And a blockbuster IPO today. Specialty chemicals manufacturing company Rossari Biotech has a strong debut on the street. Lists at 670 rupees per share, a massive premium to its issue price of 425, currently trading just shy of 700. All right, let's take the last headline forward. Now, the new kid on the block, Rossari Biotech, listing at 670 rupees per share, a massive premium to its issue price of 425. To discuss this and the outlook for FY21, we have Edward Menezes, the executive chairman of the company, as well as Sunil Chari, who's the MD of the company, joining us now. Thanks a lot, gentlemen, for joining in. Mr. Menezes, we spoke with you a couple of weeks ago. You said that the company is looking to be debt-free post the IPO. Now that you're debt-free, you've gotten a bumper listing. The stakes become extremely high because the company was offered at pricey valuations and now currently trades at around 52, 53 times FY21 earnings. So the onus is on the company to go ahead and deliver. If you could give us some details in terms of the growth outlook for this year itself. The last 3 years, you've been growing over 40%. In this year, what's the outlook?
So in this year, what has happened is in the first 3 months of the lockdown, we were at about 50-55% of our capacities. And in July, the capacities have built up towards 70%. And we are very, very sure that in the coming month, it will cross the 80% mark. However, our home personal care and performance chemicals have been taking the lion's share because textile specialty chemicals was a bit slow in the month of April and May, which is also picking up in the month of July. So we feel that in this year, we should be up almost 15% over last year.
Okay, all right. Well, 15% growth is what you're guiding for. Well, Mr. Chari, let me come across to you. Your home personal care and performance chemicals, that's the PPC division. That's the one that's really grown. I'm looking at a couple of numbers. In fact, it's the contribution has gone up dramatically from around 20% to around 47% odd. Where does this head in terms of a contribution? And in that sense, where does it take the margins to? Because higher contribution coming in from this segment helps your margins, isn't it?
Yes. So the HPPC is poised to grow. We were 47% last year, and this quarter it has been much higher, and it will grow further. It will be the driver of our growth. The Dahej facility also, is geared up to take care of the extra demand. We see the future to be good margins, but as a strategy, we always seed into new businesses, new segments within our core competence of the 4 chemistries we work in, which is the acrylic, enzymes, silicones, and surfactants. So I think we are very happy to say that we'll be able to maintain these margins or grow these margins.
All right, maintain this margin, but these margins have seen a big growth from 11% some few years ago to around 17 odd percent. So let me just, take that back to Mr. Menezes. If you could tell us across all the verticals, what are the margins that you enjoy, and whether that will improve going forward or not across your home and personal care. You have textiles and animal health. In all these three verticals, what are the margins?
So in these three businesses that we do, one of the businesses, which is the textile specialty chemicals, is a business which is a mature business. And therefore, investments in this business are not, we are like capital neutral over there. We don't need to infuse any capital there. And therefore, although it is the lowest gross margin business for us, means the gross margins will be lower than the HPPC business, and animal health and nutrition business has the highest gross margin. However, the spend on animal health and nutrition is bigger because that is the smaller pie in our total business. So as you see, as I mentioned, animal health and nutrition is the highest gross margin, followed by HPPC, and then followed by textile specialty chemicals. But finally, the EBITDA margins for all the three businesses remains the same. It will be in the region of 17 to 18%.
All right, and what about your AHN business? That's your animal husbandry nutrition business. Out there in the last year, you all did close to around 57 crores in terms of revenues. As you're saying, the margins are highest out there. It's a smaller part of your business. But what's the target in that business? Maybe in the next couple of years, where do the revenue scale to?
We are targeting 15% growth, across the different segments. AHN, I think, would grow higher because the base is smaller. We are into poultry feed additives and supplements. We are into pet shampoos, and these two segments are growing at 20% per annum. So I think we will grow better than the industry standards.
So let's make it simple then. Yeah. Let's make it simple. When do you head to 100 crores in this segment of business? You're doing 57, 58 crores as of now.
If you do, a simple mathematics of 15-20% a year, I think 4-5 years we should do 100 crores.
All right, 4-5 years, we will keep an eye out on 100 crores. Small part of your business, high margins, but high growth out there as well. You have incurred some capex. Mr. Menezes, the last time said to us that the Dahej plant will come on stream on March 2021, around March 2021. So if you could give us a sense of how utilization will ramp up from there on, what would be the revenue contribution in FY22 and FY23?
So we are very confident that once the facility at Dahej is up and running, we should be able to utilize 20-25% of that facility in the year 22, and the remaining 2 years or 2.5 years, we should be able to take up the remaining portion of the facility.
And Mr. Chari, you said that you keep seeding your new businesses. So what's your annual R&D spend as a percentage of sales?
Our R&D spend is, little less than 2%. We believe in using our intelligent chemistry platform. We do not believe in, focusing on new molecule R&D or new molecule development. We focus on application development. And that is why, as a company, we started with no capital. It was 7 lakh rupees capital. So we respect capital a lot. To invest anything, we need to see a return, on capital employed to be very good, and that is why we, in our R&D, we are very prudent in spending money. But the R&D team works so hard, and, we have a team, which is led by Mikhail and Manjari. And we look at, multiplying on the same platform, the same IP which we have developed, and going into different segments. So water treatment, plastics, paper, cement, inks and coatings, paints. These are new segments where we would focus in the future.
2 years ago, you all were at around 300 crores in terms of revenues. You have doubled your revenues to around 600 crores. That's pre-IPO. Now is where the interesting part comes in. A lot of shareholders, there'll be a lot of expectations from you all. So given that you're going to be increasing your capacity, how soon do we see the revenues double, maybe to around 1,200 crores?
See, we are blessed with good employees. Our both children, my son Yash and both have joined the business. We have people who have been with us for long. Our seeding, our debt-free balance sheet, our new capex. We are looking at a very good 5-year growth plan.
All right. Thanks a lot, Mr. Chari and Mr. Menezes, for joining us and giving us the details, the outlook of your company. Fairly confident sounding management, and rightly so, after a 65-67% bump up post the IPO price. But then from here on is where the street will keep an eye out on their numbers extremely closely. Wish you good luck in the secondary markets. With that, we slip into a short break. Come back, we get you more on the markets and individual stocks. A technical check with Shrikant Chauhan on the other side.